Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for Monday, the 25th of March. As stocks really just kind of tried to figure it all out. Not a lot of tremendous movement today after Friday's sell-off, as a little bit of a doji type of a day. And good afternoon, Lloyd. Good afternoon, Lorena. Marie, always great to see each and every one of you guys. Hope you all had a fantastic weekend and a great day both in and out of the market. Hi, Patricia. Great to see you as well. Taking a look ahead to earnings, we do have a handful of S&P companies. You've got Red Hat coming out tonight. You've got Carnival, McCormick, and IHS Market coming out tomorrow before the market opens. So no huge names, but a handful of S&P companies will be coming out with a report before tomorrow's opening bell. I always find that interesting. Most of the time, it's not much to see, but every now and then, it's interesting things develop. And good afternoon, Dustin. Great to see you, my friend. As you can see here, you don't need me to tell you this, but looking at the heat map probably tells you everything you need to know about the market today. Very mixed, some red, some green. Most of our movement was pretty small. Up 0.5%, down 1% type of stuff. So, I've enjoyed doing the Mackey and Martin show. It's we might just have to steal that one from Matt and Tim. We'll see if they'll let us have it. So, hey Marcelo, great to see you, my friend. Taking a look at the S&P 500 on the intraday, we did sell off in the futures market, which of course translated into our opening bell. A little bit of a drift down early in the day, and really just kind of a slow back and forth drift throughout much of the trading day. So not really giving us a whole lot of new information other than the bulls aren't going out with or leaving without a fight, if nothing else. And hey, Am, good to see you as always. If we look at an hourly chart, and we're seeing this on a lot of the different indexes and the different sectors right now, and it's certainly a thing that I use to kind of help gauge momentum and turnaround. Most of our indexes and different sectors are still below their 9-hourly EMA. And of course, I always think we always have to start somewhere, right? So I need to get above that to even think that the pullback's ready. So I don't think today's candle has sold me that tomorrow is the day to rush in from a bullish perspective. It really was a doji party. I was looking at different time frames. You see it on the on 4 hours and 2 hours. So yeah, it was a doji party type of a day. And quite honestly, I don't think that's a bad thing. So, yeah, I think so too. It never really got, it has some fight in it. And this is one of those things where we have to make sure that we're following our rules, not being reactionary, which I know sometimes can be easier said than done, is as much selling as we did see on Friday. And I think it's fair to say it concerned you a little bit. We really didn't technically do a lot wrong on longer term time frames. Right. And so I think maybe that's one reason, Marcella, why we saw a little bit of a fight develop here throughout the course of the day. And hey, Scott, good to see you. Doji. That is the name of the game. Dojing right at that. Still a little bit volatile. We're still moving back and forth. It doesn't feel like any of us quite trust it just yet. If we plan on trusting it at all, I don't think for me today is that day. It's a start. Another day like this, followed by some upward movement, I'm going to be interested from a bullish pullback perspective. I still believe that is the most likely thing that we're looking at here. Whether I'm right or wrong, we will have to see. But I don't think we're going to have that confirmation, at least that I'm looking for, going here into tomorrow. So yeah, there you go. I don't do the Zoom or the IPO thing, at least until price action has had a chance to kind of develop. So, I'm not a big fan of investing or trading IPOs because for me, the technicals, they're just not there. So I don't feel like I have a leg to stand on. So I'm never the right person to ask. I have a pretty, strict rule about not trading but I am very interested in seeing how it performs. We use a lot of Zoom over here at Tackle Trading. For the most part, I get along great with it. And usually when I don't, I figure it's just because it was my time to get beat up a little bit by technology. But that's going to be an interesting one if they're able to get that out there. So over in the NASDAQ, very similar. Maybe you could argue we put up a little bit more of a fight today, but really, I think price action across the board for the most part is going to very much mimic what we saw on the S&P 500. No real turnarounds just yet. So just much like the S&P, very interesting pullbacks. And, and some of these tech stocks, as you guys know, have had really, really good runs. So, whether we ultimately get it or not, don't let a day of selling scare you from, looking for potential pullback opportunities if you get what you like a little bit later in the week. Maybe you will, maybe you won't, but now is a great time if you are interested in a tech pullback to be kind of thinking about who might belong on that list of potential watch list candidates. So yeah, there was dojis everywhere today, Scott. I think that was the name of the day. It's we might have to change our show to the doji report if we get another one of these. And honestly, I wouldn't mind it. I really need to see that fight. The biggest thing that concerned me on Friday, as you guys know, wasn't that we sold, or even that we sold a little bit more than maybe we would have liked. It was that there was just no resistance. Nobody was buying all day long. So, I needed to see it slow down one way or another personally. I think this is kind of what I wanted if I could have made a day look like I wanted it to. So, but there were a ton of dojis. Yeah, and some of those, bearish ones definitely got me too in as well. So yeah, a lot of things were kind of knocking right on that door today. There's no doubt. Dow Jones, another doji party, just north of that 200-day moving average. I do prefer the NASDAQ, as you guys know, in particular to the Dow Jones, but I also prefer the S&P, I think, to the Dow Jones as well. And that's simply because I have to at least be moderately concerned about this resistance around 26 that formed and has pushed us down a fair amount. Do I think it's a big deal? Not yet. We haven't broke support. And for me, you're not breaking support. How bearish can you be? But a little bit of relative weakness overall, I still believe, but a very, very similar trading candle today. Big old doji here today. The rut is really the one that we have to, I think, be concerned about. And we talked about it on Friday. We talked a little bit about it in the halftime report, or the No Justice with Mackey and Martin report here today. And there are a few things that are breaking. The Russell is one of them. And here we are at the end of the day, closing right below that old support level. Of course, we took out the 50-day moving average. We kind of ran into it on the intraday, but we did still close below that breakdown point. I still think as long as we are below that, you have to have a little bit of a bearish bias on this type of a chart. That's certainly my trading rules. Do I have to be a crazy bear? No, but certainly not bullish if you're breaking support. So this is certainly the index that does concern me the most. We also have seen, the financial sector break down, and we saw that last week. So there are a few things that are showing, technical weakness, in my opinion, not just bull pullback type of selling, whether it's, maybe a little faster than we like. That's what I see when I look at technology. But when I look at financials, I see banks breaking support. I look at the Russell, I see it breaking support. So I do think we want to make sure, as always, we're following our rules, not getting too crazy one way or another. I think there are a few mixed signals out there technically in the marketplace, especially with financials and the Russell closing below support here yet again. So yeah, and I was particularly pleased, Marie, with Cody's intro. I didn't see it. He said I was going to enjoy it, but I didn't get to see it before we went live, and he was right. I did enjoy it very much. So we still are hanging around on support on the material sector. Couldn't really get going. Not a lot of new information. We did hold support. I think we have to put that as a little bit of a win for the bulls, but we're really not able to establish any momentum other than just holding it. This is, in my opinion, a pretty important support zone. Old swing level, of course, the 50-day moving average. If this breaks, I have to be concerned that it's a double top breakdown pattern. Now, that hasn't happened yet, and it may very well not happen, but I will call it a bearish signal without question if we do break through that support level. So this continues to be a little bit more neutral for me overall. I still would really like a break to the upside, but we're a ways away from that potentially happening. So, right now, a break to the downside, I do believe is a bearish signal within this sector as a whole. But we did hold up support even early, the first 40 minutes or so of the market, it was drifting down, not super aggressively, but kind of straight drift to the downside, still able to hold here at least for one more day. Keep an eye on that support level. You certainly don't have to be bearish if it breaks, but I do think we want to be mindful if we do take out support levels on these ETFs personally. Working all the way back to the bottom and then kind of starting right back into our trading range again in the energy sector. For me, I still want to see a break. I'm not, we had that nice break on Thursday, but that's now gone. I'm worried that we're back into this longer term trading range. I'd like to get back above that 67 personally before I go too bullish. But on the other side of the coin, and again, much like the rest of the market, I don't feel like today gave me confirmation that I would need. I could maybe understand somebody who was looking at as a pullback opportunity. We did technically break a new high, and we were certainly brought down to whatever extent with the broad market on Friday. So we, did technically make that high. So if someone were to call this a potential retracement, bull retracement in this sector, I think I could understand where they were coming from. I don't think I would be on board with their decision as far as getting in to it, but I would understand. I certainly wouldn't be bearish right there. I still feel that within the energy sector, our true sell signal is way down here at $63 approximately, still within a little bit of a trading range. So a nice bounce back candle here within this sector, but for me, we're just right back into that middle of that range. And I'll wait to see if we want to come back out of there. Now, when financials just carried over that momentum, this is one of those charts that, had we, continued to see selling like we saw on Friday, who knows how bearish this thing looks. It was certainly propped up to one extent or another here, I would imagine, by the overall market's activity here today. But another day, another close below that old support level. I will look at that old support zone to kind of act as our primary level of resistance. I think realistically speaking, for me, this is an area that overall you have to be looking at from a bearish point of view. Breaking support is never a good thing. As you guys know, though, so much of this movement is coming from the banks. There are, potentially things like insurance and things that may still be interesting to us, from a potential bullish point of view. I think we want to be careful if we are trading bullish into this sector, no matter what, to be quite honest with you. But I'm not opposed to a good, clean setup on something non-banking within the financials. Probably the insurance companies, if something were to line up, I'd be open to debating it. Right now, the banks continue to struggle. More of them have taken out support, and maybe it's not a huge deal, but I know it's hard to spin it as a positive thing. Whenever I see an entire area breaking support, it's immediately going to get the red flag thrown on it. I'm immediately going to stop being bullish and to start debating about, how bearish do I want to be? And I don't think, for me at least, nothing has really changed. Another day, another close below that support level. Hard to look at that on a positive note. A little bit of a rally into that could present some interesting bear retracement candidates potentially. If we push right back through it, maybe we can start talking again from a bullish point of view overall. But for me, that's where I am with the financials. Industrials, just like the materials, hanging right there at that support level, probably are going to go the way of the market, just realistically speaking. Same with materials. If we see a deeper pullback develop over the next couple of days, I mean, anything's possible, of course, but I have a hard time thinking that, materials and industrials are going to be able to hold these support levels, that they're just really just right there dancing on them if we see more selling in the market. Much like the materials, I think if we break the support level, we have to give it a bearish downgrade, right? You have to get a little bit less bullish or more bearish, however you like to, view things. I know I certainly will be looking at it that way. Lower highs, lower low via the break, not a lot of support. I mean, there's going to be lots of little things, but there's really not going to be a ton of support for a ways to go. So this is an important battle that I think we're going to be watching develop, and we could see a nice move either way as early as tomorrow, right? Support's a tempting price to buy, just like breaking support is a tempting price to sell. So we're still right there on the edge with the industrial sector as we speak. Over in tech, doji party here, much like the NASDAQ. Many of these stocks, are not breaking support levels. Many of these stocks have not even approached their rising 20-day moving averages within this sector. For me, if this is a pullback week that develops, on Wednesday, Thursday for bullish retracement entry points, this is probably one of the primary areas that I will be looking at for right or wrong or better or worse. I still like where our charts are for the most part in the technology sector, just not breaking down as much. And maybe it's because they had a little more room to go. Who knows what that might be, but a doji right at that 9 EMA here today. Again, I think for me, at least, I'm not sold. Volatility is a little higher. There seems to be a little bit more fear in the market today than even there was just a week ago. And maybe that's just what it feels like to me. But, that is certainly how I am feeling right now. I still overall like it. I still overall believe this is probably most likely a pullback opportunity. But it seems like, the faith isn't quite there yet. I need another candle, broadly and on the technology sector. But a lot of those tech stocks, as you know, were in nice upward trends, had not really had pullbacks since our pullback a few weeks ago now. Pretty, meteoric rise up to the Thursday high. So a pullback certainly was healthy for them, if that's all that this is in my mind. Over in discretionary, we're dancing around that 112. I think importantly for me, we closed above it. I know that, it's not the prettiest textbook setup right now, but I do continue to like this area. I call it a win for the bulls closing back above that 112 here today. Potential bullish pullback again, just like the overall market. I don't feel it's there yet. Technically, we did put in a lower high and a lower low again here today, but we did see some buyers step back into this area. It appears to me that I'm not the only one who has some interest within this discretionary sector right now. Maybe it was bad timing. Maybe it was always meant to be, but it's still, in my mind, holding up fairly nicely. I don't think, again, the entries for pullbacks just probably aren't there for me in this area either. Over in the utility sector, kind of a doji at the top here today. Not a lot of movement one way or the other, as we're just kind of caught up in the market in our own weird way. We're dojing at the top instead of dojing down in those moving averages, right? Or at support levels. Not a whole lot to see here. I don't think anything happening today changes your overall outlook on the utility sector. You could make a case that we're at resistance. We need to see a little bit of push through that for us to expect for a little bit more of a run in the very short term. But longer term, as long as we're above 57 with the way the chart looks right now, I don't see any way you can make a reasonable bearish argument on the sector as a whole. 57, I think, is very important. I do expect it to hold, but I think that is a very important number for us. If we do work our way back into that, we will certainly be talking about that number. So over in healthcare, another mixed day. It continues to be a very wishy-washy, back and forth area, in my opinion, right now. Not a whole lot has changed. I think for the most part, we find ourselves in a little bit of a sideways range right now. I do have a few concerns within this sector. It's not as pretty as I would like it to look. There are still some very appealing things out there, though, that are in nice upward trends and showing great strength. There's just quite a few things that are making, testing major support levels or working into resistance zones late last week. So I still think we want to be very on top of the individual components within this sector, as opposed to I like or I dislike the healthcare sector. I think the best approach, in my opinion, right now is take it on a case-by-case basis, really as it has been for a few weeks now. And I don't know when that will change. It will eventually, but not today. So over in real estate, much like the utility sector, just a doji at the top as we continue to show overall strength, but not a lot of movement here today. doji, 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 everybody gets in on the action. That's why maybe the movement that we saw in discretionary, we can kind of tip our hats to. There's actually a little bit of buying going on over there as we look at the end of the day candle. But in real estate, I mean, we're just, again, dojing at the top, at our resistance level. Really not a whole lot to see here that we haven't talked about lots before. Support level, I think we can call the low that we put in last week our new swing support zone. Of course, that's going to line up pretty closely with that 35 area, which is, of course, where it had its major breakout not too terribly long ago. Continues to be a very strong area. There's no doubt about that. And lastly, communication services, much like tech, a little bit of a doji day back and forth. We've talked before, and a lot of these components are looking a little more interesting. Last week, Google showing a lot of strength, Netflix even breaking resistance finally, although I still don't trust them, Facebook holding support. So I do kind of like individual components as potential candidates from a bullish perspective going into later in the week. On the ETF level, holding support, I think, we could at least make a case that our swing lows from last week should be our primary support zone. If that breaks, should probably throw a little bit of a red flag, maybe not necessarily going bearish, but maybe getting a little less bullish. But you guys know, for me, I kind of approach this sector kind of all the time on a case-by-case basis because I've not figured them out just yet. It's still a hang up that I have. And I don't know if I just have a hard time. Google and Netflix, okay, they make sense maybe, but what about EA and Charter Communications or Verizon? And so just a lot of mixed bags in here. And I continue to kind of treat it more on an industry level or an individual stock level than a sector as a whole. But I do think, as we look at this chart on the ETF, we've had that pullback, we created that higher high. I think we could call this support at this point in time. So that should be our short-term primary level of support, these swing lows from last week. If they falter, there is, of course, lots still holding them up. I would note primarily the 50-day moving average. If we see upward movement, I don't think this is a very pretty pullback or retracement or attempted retracement with coming right back to that previous swing low. So I don't believe I'm going to love this chart, but if we see some upward movement within the sector, I could definitely see this being an interesting area in my mind in the, maybe in the middle of the week if we're able to get some upward movement. Now, with all of that said, I still don't feel, for my trading rules, I have reason to suspect that it has to happen tomorrow. Overall, we are still in upward trends in most of our indexes and most of our sectors. And so am I going to be surprised? No, I don't think, I should be, but I don't think the clear signals that say, yeah, tomorrow is the day to jump back into the market, I don't feel like they're there here today. Maybe we'll see them develop here tomorrow. I do think we can watch the intraday lows that we set up in the market on some of these different sectors here today, unless we're, major levels like industrials and materials, as kind of a, hey, if these things give out, maybe there can be a little bit of movement within that area. So not a lot changed here today overall in the market. I guess that was a long-winded way to say not a lot changed today in the market, right? So over in the volatility index, coming back down a little bit, still a little bit higher than we spent most of our recent time with. So I don't think traders are quite comfortable, saying, okay, back to business as usual, just a pullback. Now, can that easily be the way that it plays out over the next couple of days? Of course, that certainly could be. But again, I think today's, pretty good movement from top to bottom. Nobody's quite sold, at least it doesn't feel like it to me, that, yeah, we're ready to jump back in. We want to buy the dip, we want to buy the pullback, but it feels to me like we're not quite there yet. We need another day. And I think the VIX does illustrate that. Did come down off of the highs today, but still a lot higher than we spent most of our time over the last several weeks. Over in the dollar, more of the same, still within that range. I continue to look at it overall as neutral and treating it as I have been for several months now, waiting for it to break out of that longer term trading range as opposed to trying to swing trade in the middle. Not that that's been the most sensible thing. In hindsight, I pretty much could have just buy at the bottom, sell at the top and done all right for myself, but that's not really my style. I'm not able to carry the momentum from late last week. We're kind of stuck in that moving average soup right now. But I think we have reason to believe that, if more on the bullish side of neutral than the bearish side of neutral, if I had to make a stand. But for me, I'm still looking at it. We're within this longer term range that we've been in for going on 6 months now. Eventually we'll come out of that, and I feel like that might be giving us a pretty interesting signal if and when that happens. Not overly excited. We do have lots of support in that 96 range at that 200-day moving average. Next level of resistance or resistance zone, probably there in that 97 ballpark. And then beyond that, at that 97.50, 97.60 general range. And then, of course, we're dealing with some pretty significant highs beyond that. So still, for me, very sideways overall. Gold, after trying and trying and trying last week, finally was able to break through, and boy, did it work up to that next level of resistance when it finally, when folks finally believed in it, working very close to that 1325 zone area of resistance. I do think it's something that we want to keep an eye on from a technical point of view. I believe you have to look at this overall as a bullish signal, clearly breaking resistance, pretty good oomph behind that break as well, working into a new level, old resistance, old support. So we'll want to keep an eye on that 1325 range. I still think that there are more appealing areas to swing trade directionally right now than the metals market. But I wish I maybe didn't feel that way on Friday. So pretty nice move here today. Overall, I do remain overall bullish on on gold, but not really on the swing trading level at this point. I still want to see it kind of develop a little. I want it to be easy. It was very easy, especially in my opinion, this first break, yeah, and then hindsight, but I think it was really easy when we had this second break back here. Those of you who are hanging out with me in the recap, that's really where I actually felt comfortable. I called that a signal, but I wasn't really comfortable at that point in time. It really wasn't until this second break, and we were just really well behaved. And right now, it just doesn't feel to me that gold is super well behaved. And so I'm liking the price action. I do like that we were able to close above that resistance level that caused us trouble pretty much all week last week. I do feel that that is a bullish signal, but now we have to deal with a new level of resistance. I'm not quite there yet. Now, if we get a pullback and create a higher low and then break that, maybe, because now we're starting to get this trend back, right? But we've got to deal with this resistance. We've got to deal with our swing high. So we'll have to see where this one takes us. But watch this 1325 area. Can be a potential resistance catalyst. Can also be, hey, if we push through that, could also be a spot where more buyers would be looking to step in. Just because I wouldn't be one of them doesn't mean it couldn't be one of those spots. So I do think that's an interesting battle in the days to come at around 1325. Over on silver, closing above 1550 for the first time since we broke down. Below 1550, I do feel you have to give that a little bit of a bullish, nod. But unlike gold, where there's a clear resistance level beyond that, maybe there's some room to go to our next level. Here in silver, working with the 50-day moving average now. We've got previous support levels at 1575, resistance levels in that 1590 range, obviously the 1610, 1612 ballpark. So lots of resistance ahead of us if we're going to continue this bullish move. It's going to be challenged kind of over and over and over again, which is never what I like to see. Beyond that, though, you do have to give it a little bit, maybe more wiggle room, or a little bit more of a bullish look today with closing above that 1550. If we look at this on a weekly chart, let's just see what this one looks like here. It looked like going into last week, potentially we're dealing with a kiss goodbye type of a pattern. And I know we're only one day in, so I'm not going to get too excited. You guys know my overall view on silver is waiting for it to come out of this long-term range. If that continues to push up, though, that's going to get rid of any of those bears who share that, hey, this might be a kiss goodbye. So certainly a good start to the week in silver. It hasn't done enough to sell me to want to get involved at this point in time. Lots of resistance ahead of us, no doubt about it. We have our swing support level down here at 15, 17 or thereabouts, kind of as our next, hey, we pull back a little bit. Now we've technically made higher highs and higher lows and closed higher highs and higher lows. Still don't love it, though. I think there's lots of challenges if we want to have a bullish run. I would much prefer gold if I were going into the metals with the way things look here today. Over natural gas, gap down on the open. Let's just go into our hourly chart. Gapped right down on the open into that range, right into that ballpark area that we've been looking for, kind of danced around on that in that area before kind of starting to move back to the upside, keeping us squarely within this trading range. With all of that said, not really much has changed. A break, and a close below this support level, I will certainly call a bearish signal. Still don't believe I call it a tradable bearish signal with all of that support at 250. Not a lot of room to work with, but that's just me. I much prefer a break to the upside. And every week, I just hope that, again, I hope we're having this conversation on Monday. We're still in this trading range. The longer we're in this range, I don't know if it's going to break that resistance, but I know that the more time we spend in this, the better signal I think that can potentially be for us. So we're still in the same range that we have been in for a month plus now. Not a lot to change, not a lot changed here today, but kind of hanging out at support level. I don't feel like there's enough room to try to directionally trade in there, as you guys know, but we'll eventually work our way out. And lastly, over in crude, crude doesn't want to be left out of the doji party, although maybe a little more hammer than doji here today, working down, closing in on that 58 area. I think we got 58.17 as the low. A little bit of a rally off of that, closing back above that 9 EMA, showing a little bit of momentum in my opinion. Folks are, I still think most folks are looking at this through a bullish lens with our holding our 58 break above our moving averages. Not really a lot of resistance until we get to that 200-day moving average in that 6150 ballpark. I still think that it wants to go there personally. I don't know that this is the day that, I think you need to be getting in or anything like that. But I still believe, especially as long as we're holding above 58 in this rising 20, I believe it is developing a potential bullish retracement opportunity. Aggressively, I could understand an aggressive argument moving in if it broke above today's high tomorrow. Now, I feel that'd be too aggressive in my opinion, but I could understand the argument. We certainly saw with that long tail that developed, we were red at some point, right? That was a red candle at some point in time, really showing a lot of nice movement off of that low to close pretty strong. I do think you have to give it a little bit of credit for closing strong here on the day. So 58 continues to be the primary area, although I wouldn't specifically call it 58. I'd certainly call it an area here as a primary support level for me, and 6150 or approximately 6150 in that 200-day moving average as resistance for me. So I do feel it's developing a pullback opportunity most likely here as we work into next couple of trading days. So, ladies and gentlemen, that'll do the market recap today. But as interesting as and exciting, maybe for better or worse, as Friday was, kind of just a day here today as the market seems to really just be digesting. Does that mean anything? Do we need to be freaking out, or is this just another great opportunity to buy the dip that the market so very much loves to do? I still lean that that's the way it's looking. I don't believe that the signals are there to make me feel great about saying that happens tomorrow. So I do need another day, broadly speaking, to be sold one way or another. Hey, you guys, you are very welcome. It's always great to see you guys. And some of you seeing you twice in the same day, always a very good time. And if you are new around here, be sure to subscribe to the channel and hit that notification bell, and join us over at Tackle Trading on Twitter as well. You can, of course, find me at FrankMartin23 on Twitter if you're ever looking for me as well. If you enjoy the recap, it's always helpful and appreciated if you do give it a thumbs up. So thank you in advance for that. I've got our onboarding webinar here tonight at 8:30 Eastern, welcoming our new team members. So I'm excited to get a chance to meet some of our new Team Tackle members. So that'll be a lot of fun. Always enjoy that quite a bit. So ladies and gentlemen, I will let you guys get out of here, but you guys have a fantastic Monday afternoon. Get ready for another Tuesday. Tuesday's coming, whether it's exciting or not. Only time will tell, but we will find out together. I'll see you guys either in the No Justice with Mackey and Martin show, aka the halftime report, or here again in the market recap tomorrow afternoon. So, hey, thank you, Scott. Thank you, everybody. You guys have a fantastic afternoon, and I will see you tomorrow. Bye, everyone.